After the recent sell-off on the cryptocurrencies, most traders and investors believe that the market is going to now go to the downside. A lot of analysts are predicting $2,000 per Ethereum, $40,000 per Bitcoin. And in this video, I'm going to share with you my opinion on what I think the market is doing and what I am personally doing in the marketplace. So the opportunities that I'm looking out for, whether it's going to be a buy or a sell, I'm going to be outlining in this video. So the first thing I look at when I come to the chart is the bigger time frame. I want to understand the bigger time frame perspective, whether the bigger time frame is bullish or bearish. And if the bigger time frame is bullish, all I'm interested in is looking for opportunities to buy that asset or currency, whatever that is, whether it's a stock or forex or crypto. I like to see the bigger time frame. In this case, as you can see very clearly, the bigger time frame is bullish, consistently creating higher high and a higher low, a higher high and a higher low, and a higher high with some right here as well. And after that, we dropped to the downside, created this low, rejected off this inefficiency, and expanded to the upside. So personally, after that rejection, what I was looking at is this high right here. This is the high on weekly time frame and a low. And as you can see very nicely, price broke above that high and closed above the high as well. So if I wipe my chart for a second, you can see that very clearly. The high was broken. Now, after a break of structure, the next thing I would like to see is a retest. And if we go to the monthly time frame, you can see this is the high. And if I clear my chart for 1 second, you can see this is the high. And this right here, an inefficiency. We came into that inefficiency for a retest. The moment price mitigated that inefficiency, the only thing I want to see is a 4-hour break of structure. Now, we start to scale down to the 4-hour time frame to see what's happening. And on the 4-hour time frame, you can see very clearly on the 4-hour time frame, we have a swing high and a swing low. And that swing high got broken significantly and price closed above that swing high, showing me that we're bullish. A shift in market structure has occurred on the 4-hour time frame. So all I'm looking for is an opportunity for a retest, and then I look for a buy. Now I'm looking for a retest at discount zones. This right here is the last down close candle. The last down close candles that took liquidity before the major expansion to break this structure. So this becomes my point of interest where I want to see the market retest. The moment the market retests this entire key level, I'll be looking for a 15-minute shift in market structure to the upside to buy. Now, sometimes price will come into this position, mitigate it, break 15 minutes to the upside, still go to the downside to run the liquidity at the sell side, and eventually break above and continue higher. Induce liquidity. For example, you can see that happen right here. You can see how price mitigated the line, broke a 15-minute structure right here. If we take this back, you'll see very clearly we had a 15-minute structure right here, 15 minutes high, 15 minutes low. We broke that structure significantly, and then eventually price still went to the downside to run the sell side liquidity. So they basically induced liquidity here. So traders are going to buy and then eventually wipe them out, which is normal in trading. You're going to take losses, and that's okay. What matters is you stick to your trading model. Whatever trading model, whatever it is you're looking out to see in the marketplace, stick to it. Wait for it. Now, you can see that after price went to the downside, took this liquidity. If we go to the 15 minutes time frame, you can see we still created another high, created a low, broke structure again. Now, after this break of structure, the only thing I'm looking for is number one, where's the liquidity? And right here, we'll have low resistance liquidity. Number two, we go to 4-hour time frame. I want to see what is actually happening within the low to the high. And if we go to the low to the high, you can see we have an inefficiency. So this inefficiency now becomes my point of interest where I want to see price come back into to potentially look for a buy to continue high. So what I'm now looking for is for price to come into this inefficiency, and then I'll be looking for a potential 5 minutes or 3-minute shift in market structure. Once I see that, I'm going to be getting into a long position to take this to the upside. And if for any reason price drops below this key level, wiping my stop loss, resting right here, or maybe it drops in here, breaks 5 minutes, I buy it and it wipes me out, takes this low, that's still okay. It doesn't change my bias. My bias remains the same, which is bullish. The only thing I'm going to do is I'll still look for potential areas that I'm going to buy it from. And what are those areas? For example, if price coming down here, breaking above the 15 minutes, and then eventually dropping to run the low, what I'll do is I'll still wait to see another break of structure on 15 minutes time frame. If I see another one around here, I'm still going to look for a buy. But if eventually this one right here works, now this is what I'm going to do. Right here, this low resistance liquidity is going to be my first entry, limit order right there, stop loss, this low. Now, if I anticipate that price could potentially come as low as mitigating this green box. Now, the thing you have to understand is there are areas in the market that has high probability for price to mitigate, low probability for price to mitigate. What do I mean by that? For example, after a break of structure, there's a high probability if we're bullish, 7 times out of 10 times, the price will come back to mitigate the high. Exactly as you can see, high, low, break of structure, come back to mitigate the high. There's a 70% chance that area gets mitigated. It's not 100%, nothing is 100% in the market. There are times price break structure doesn't retest, continue higher. But 70% of the time, there's usually a break, retest, continuation. Now, if we're bullish, that's what we usually want to see, break, retest, continuation. This high, 70% of the time gets mitigated. Now, around 40% to 60% of the time, price will come a little bit deeper to run sell side liquidity like this. And that is why you can see my entry is right here. And price can come as deep as this position. Then I'll also show you why I have that resting right here. So one thing I do is I also like to use the line chart in my analysis to have a better understanding of what the bodies of the candle is showing me. And in this case, if we use the bodies of the candle to have a better understanding of what is happening, you can see we're having this lower high and a lower low and a lower high and a lower low and then a break of structure. This was the last down close candle before breaking structure. That is why this key level is my point of interest. Now, it doesn't mean that I'm going to place a limit order right here. There's a very low chance. There's 20% chance that price will come this low. It doesn't mean it won't happen. It can 100% happen, but there's a very low chance that will happen. But in case if it happens, I'm already ready because I've already programmed my mind that this is a potential area that has a very low chance of price coming there. But if price comes there, I'm looking for opportunities to buy. That means if I see a mitigation of this key level, I wait for a 5-minute shift of market structure to the upside. Once I see that, I'm looking for a buy and I'm using the high that got broken. What do I mean by the high? This is what I mean. Let's say, for example, we see a drop and then price comes down in here, mitigates it. The moment I see a break of structure on the 5 minutes time frame like this, I'm using this high as an entry. Stop loss, this low, I'll add extra 5 pips. Why? Because of spread, and this is crypto. You need to give it room to do its thing because crypto is very volatile. It can come very close to your stops, and if your stop loss is resting right here, it's going to wipe you out. That is why you need to give it some room. So that is what I'm watching on Ethereum, and I appreciate every single one of you for watching this video from beginning to the end. For those who stayed to the very end, we do have a fantastic bonus for you. You can go to our bio or you can comment on the comment section and let us know if you want to be a part of our members. We do have a free Telegram group where we share our analysis right there and also our thought process where you can ask questions. If you're struggling with trading, whatever it is you're struggling with, you're free to ask your questions in the Telegram group. So leave your questions at the comment section, and if you want to be a part of the Telegram group, you can leave your comments at the comment sections and I'll send you the link to the Telegram group. I appreciate you, and I'll talk to you in the next video.